Hi everyone and welcome to today's video. Today I'm going to give you 5 steps to a perfect credit score. I'll go through step by step how you can get yourself a perfect credit score, and it can take you as little as 12 months to get a perfect credit score if you're starting from scratch. If you're not starting from scratch and you already have yourself a good credit score, then it could take you as little as a few short months to get yourself that perfect credit score. So let's get started and I'll take you through the steps. Step number 1 is to find out where you are. So for this step, you need to find out what your current credit score is. So you can find out your current credit score from a number of different websites, and those websites actually tell you your score from a number of different credit reference agencies. So you can sign up to these sites for free to get your credit score. So the most common credit reference agency that's used by about 75% of lenders is Experian. So to get your Experian credit score, you need to make an account with MSE Credit Club. So that's the Money Saving Expert Credit Club. So I'll link all of these down below, but so just check the link below. And if you sign up there, you can get yourself your Experian credit score there. So I would suggest that you get your Experian credit report first, because that's the one that 75% of lenders use to actually make their lending decisions. I'll link the MSE Credit Club down below, and that's where you can get your Experian credit score. To check your credit score with Equifax, you can use Clearscore. So this is another website you can sign up for free, and they will tell you your Equifax credit score. So Equifax is just another credit reference agency. So they will also provide you with a credit score. Now, your credit score through Equifax, this is used by around 54% of lenders. So this one is slightly lower than Experian. Experian is used by the majority of lenders, but you can definitely, and you should definitely, check out your credit score with Clearscore, because it may be slightly different, and this one is still used by a good percentage of lenders. So it's good to know what your credit score is through Equifax as well, and you do that by signing up to Clearscore, and I will link to Clearscore in the description below. Clearscore now actually provide you with a weekly update on your credit score, so you'll get an email through every week and it will let you know if your credit score has changed that week. Experian and MSE Credit Club, that actually updates every month. The final credit reference agency is called Transunion, and they are used by about 30% of lenders, and you can find out your credit score through them via Credit Karma. So I'll link Credit Karma as well down below. So that's another place to check your credit score. So those are the 3 where you can check your credit score. But as I said, that one is used by about 30% of lenders. So I would say your top priorities are definitely to get onto your Experian credit score, which is MSE Credit Club. And your second priority is to get onto your Equifax credit score, which is on Clearscore, which I will link down below. It's good to check all of these, because if you're applying for credit or a loan, you might not know which credit reference agency your lender's going to use. So it's good to have an idea of your score on all of these credit reference agencies, just so you're prepared for that. The chances are they will probably be looking at your credit record through Experian, seeing as that's used by the majority of lenders. So Experian is the one to check out first. For that reason, I'm going to explain a perfect score in Experian for this part of the video. So I'll let you know exactly what an excellent score is in Experian. So I'll put my Experian credit score up here. So you'll be able to see that's my Experian credit score there. So you can see that it's almost a perfect 999 score. So an excellent credit score in Experian is anywhere from 961 points to 999 points. So you can see that I've managed to build up my score to a nearly perfect 999, but I'm a few points away still. So that's my current credit score and it's in the excellent range. A good credit score will range from 881 to 960. And I'll actually put up all of the scores here now so you can have a look at how the scores are actually divided and you can compare that to your current score when you check out your credit score. Okay, so by this point you hopefully have found out what your credit score is with a number of these different credit reference agencies. But if you only have time to do one now, then make it Experian. So check out your Experian credit score at this point, and then once you know where you are, then we can go on to the next steps of this video. Step number 2 is quite a big step, so bear with me. There's a lot of things here to check, so you might actually want to note these down as we go through because there's quite a lot to do in this step, but it's going to be really worthwhile in building up your credit score. So the first thing to check is you want to check your credit history and you want to look through and see if there are any false records on there. You also want to check if there are any CCJs, for example, that have been recorded incorrectly. So CCJs being county court judgments, things like that. You also want to check if there are any debts that have been misrecorded, if there's anything that you perhaps didn't pay for because you didn't receive the goods. So if it's something like that, some kind of store card where you didn't pay because you didn't receive it, things like that might have actually been recorded and they might be affecting your credit score and you won't know about them until now. It's really important to do this because any debts that have been misrecorded, these debts will actually stay on your credit record for 6 years, so they can actually be bringing down your score all the way until now and you wouldn't know about it. So this is a really important thing to check as well. Another thing to check here is that if you no longer share your finances with somebody, that you actually ensure that you financially separate yourself from them. So you no longer have those joint accounts with that person because those can also affect your credit rating. One more thing to do when checking your credit history is actually to cancel any unused store or credit cards because those can actually impact your score as well. That's the end of step number 2. I hope you were able to bear with me there because I think it's really important to go through those steps because they can actually have a large impact on your credit score. Step number 3 will vary based on what stage of the credit building journey that you are at. So if you already have one or more credit cards, then the step here really just requires you to keep making those regular payments and try to reduce any debts that you might have on those credit cards. So try and reduce those down. If you have been able to reduce them, then that's brilliant. And then just keep making your regular payments. So that's what you need to do if you already have credit. If you have no credit whatsoever, so maybe you've just graduated or you're a younger person and you don't actually have any credit at all, then what you need to do is build some credit. This can be difficult if you are at the beginning of your journey and you don't have any credit at all. And that's where I found myself before I started this journey. I didn't have any credit at all. So what you need to do here is you need to make sure you are registered on the electoral roll. So you need to actually get your name and address down on the register. You can do this with the council online. You need to register yourself on there because that actually has a big impact on your credit score and whether you're actually able to get credit is having an address history and having it be quite a stable address history as well. Once you've registered yourself on the electoral roll, then that will actually fix your address at the address that you currently are, and it's actually that fixed address that does have an impact on your credit score and your credit ability. So that's a really important thing to make sure that you do, because that can have an impact here. The next thing to do is actually to think about how you can get yourself some credit. Now, if you are in the situation that I was in, it's that I didn't actually have any bad credit. Because I didn't have any credit at all. So what you need to do here is check out if you are going to be eligible for any credit building credit cards. I actually wasn't, and I think that's the case for a lot of people in this country, is you might not even be eligible for any credit cards at all if you haven't had any previously. So what you can do here is you can sign up for, usually you can get yourself a phone contract, so that can show that you're able to pay off debts. So if you sign up for a phone contract, that will be important, and that can help you with this part. Another thing to do is actually to go on to a website called Lockbox. This is where it kind of works in a similar way to a loan. So what you actually do here is they will register the fact with the credit reference agencies that you've taken out a loan with them. You don't actually receive the money, but what you do is you pay them back on a monthly basis, and that helps you to build your credit score because it's reported to the credit reference agencies as a loan. So you're building your credit score because you're paying them back each month, and it kind of works a similar way to a loan, and each month your credit score will be recorded, and each month your credit reference agency will see that you've actually paid back part of that loan each month. So that's actually a really good tool, and I use that to help build my credit. So I recommend checking out Lockbox, and I'll leave a link in the description below. I'm going to do a full video about this, but it's something you can check out now. And when I signed up for it, you can pay about £20 a month. I think that's the minimum. So you pay about £20 a month for a year, and it actually just goes into a savings account which you can actually withdraw at the end. So you still keep the money, it's just a credit building helper really, and it helps you build your credit, and your money goes into a savings account at the end of that 12 months. I noticed a huge difference in my credit score over the time period, and like I said, I was actually able to build myself to a place where I have got a nearly perfect credit score, and that just took me about 12 months to do. So you can really do it in a short time, and that's why I recommend Lockbox if you have no credit, because I really found it actually made a huge difference for me. So that's if you have some credit and if you have no credit. But what about if you have bad credit? Well, if you have bad credit, then you will have gone through these steps in number 2. So you will have just checked that there's no actual incorrect records on your record. If there are actually no incorrect records and you do just have bad credit, then what you can do is you can apply for a credit building card. So these cards are usually a lot easier to get, and they will help you build your credit. They usually have quite high interest rates, but as long as you pay them off in full every time, they can be a really useful way to build some credit. What I would suggest here, if you have no credit, even if you have some credit, if you have bad credit, I really recommend a tool on the MSE Credit Club. So when you sign up for the credit club, I really recommend a tool where you can actually go on and check your credit card eligibility before you make the application, because if you make too many applications in a short period of time, that can actually be detrimental to your score. So that can lower your score if you get rejected a number of times from credit card applications, or even if you get accepted, it still affects your score if you apply for credit too much at once. So what I would suggest is before you even apply, you go on the credit club. It has a number of credit cards on there for all different types of things, for bad credit, for travel credit cards, for no credit. it has everything on there, and you can actually check your chances of getting that credit card approved without actually making the application. So it does a soft search rather than a hard search that's going to impact on your score. It does a soft search and it will tell you what your eligibility is like for a number of different credit cards with a number of different banks. So it's really helpful, and it's a way to actually kind of protect your score and find out if you do have a chance of getting any of these cards. When I went on there when I had no credit, my chances of getting a lot of the cards were very low. So that's how I knew not to apply, because I knew I would not get any of these cards. So that's something to think about actually before you even start. Go on the credit club. I really recommend it, because you can check on there and you can know if you're eligible before you start, so you don't waste yourself the time or even waste your credit score, because your credit score might go down as well. So that's something to think about. Step number 4 is something that can often get overlooked, but what you need to do here is you need to make sure you are consistent when you're entering details, whether it's applying for a credit card or even just applying for a credit reference agency check. So if you're going onto Credit Club, if you're going onto Clearscore. So if you're doing either of those, or if you're actually applying for credit, you need to make sure you enter your details consistently each time. So these details will be things like your income, even your job title, your address history. You need to make sure these are consistent each time, because it might actually flag up as odd if your income changes with each application, or if your income changes quite frequently, if your job title changes quite frequently. It might just flag up, and it can also flag up as fraudulent as well. So just be careful here, because it's something that can be overlooked, but I think it's really important to keep it consistent so your credit file just doesn't get flagged up for these reasons. The 5th and final step is to keep your credit utilisation low. So I'll explain that in just a minute, but before I do, let's look at the pie chart here to see how your credit score is made up. So you can see on the pie chart that there are a number of factors that make up your score. So these factors range from utilisation, payment history, the amount you owe, and the length of your credit history. So those are some of the key ones. So arguably the most important one, and one that we've kind of covered already, is your payment history. So you want to make sure you don't miss any payments, because this can be really detrimental and it can really have a big negative impact on your score. So it's important not to miss any payments. This is because just one missed payment can have a big negative impact on your score. Another big one is utilisation. So this is how much of the credit that you're allowed are you actually spending each month. So this can actually affect your score by up to 30%. So it is actually a big impact on your score. It can have a large impact on your score. So that's why it's really important to keep it as low as possible. Now, there are a number of numbers that actually are used to describe how high or low your utilisation should be. So Experian actually say it can be up to 30%. Some people will say 20% or 10% or even lower. The lower the better, basically. Wherever you can get your credit utilisation to. I actually try to keep my credit utilisation about 5%, but sometimes it can be 10%, but I really do try to keep it as low as possible, because it's important to keep it low. And I think that that's actually one of the ways that I've been able to build my score, is by keeping my utilisation low. I would say a good rule of thumb is to try and keep it 10% or lower. And as I said, 5% is better, 3% is great. So wherever you can get it to. I think also it's important to remember that you want to use your credit card, so you want to actually If you want to eventually increase your credit limit and actually get yourself a higher credit limit, then that will actually thereby reduce your utilisation if you spend the same amount each month. So if you want to eventually increase your credit limit, then you will need to be using the card each month, and you can just put groceries on the card or something like that. So keep it about 5%. And like I said, that's how I think that I've been able to get myself a nearly perfect score within a short amount of time. I think that one of the big factors here was actually my utilisation and keeping it fairly low. That's it. Those were my 5 tips to get yourself a perfect credit score. I hope you enjoyed it. Give it a like if you did. Comment down below and let me know how you get on. I hope it was really useful for you. Thank you for watching and see you next time.